I'm Amy Goodman. The U.S. government seized control of the mortgage finance companies Fannie Mae and Freddie Mac in what could be the largest corporate bailout ever. The Treasury Department's pledged to provide as much as $200 billion as the two quasi-public companies deal with heavy losses on mortgage defaults. Fannie Mae and Freddie Mac own or guarantee just under half the country's $12 trillion in mortgage debt. Treasury Secretary Henry Paulson announced the bailout.
Fannie Mae and Freddie Mac are so large and so interwoven in our financial system that a failure of either of them would cause great turmoil in the financial markets here at home and around the globe. This turmoil would directly and negatively impact household wealth, from family budgets to home values to savings for college and retirement. A failure would affect the ability of Americans to get home loans, auto loans, and other consumer credit and business finance. And a failure would be harmful to economic growth and job creation. That is why we have taken these actions today.
Wall Street investors were buoyed by the news. On Monday, gains were posted on the Dow Jones, the Standard & Poor's 500, and the NASDAQ exchange. Both Republican and Democratic presidential nominees, John McCain and Barack Obama, are supporting the bailout. But Obama said the government needs to take steps to guard against Fannie Mae and Freddie Mac ultimately profiting from the government assistance.
We have to protect taxpayers, not bail out the shareholders and management of Fannie Mae and Freddie Mac. This is a challenging situation that's been festering for a long time. There are some community and regional banks with potential exposure, including those serving low-income communities. We're going to have to carefully address those situations, but we must not allow government intervention to protect investors and speculators who relied on the government to reap massive profits.
Many critics that support the move say it could still have been avoided with better regulation of the housing market. Robert Reich, the former labor secretary under President Clinton, calls the bailout, quote, socialized capitalism. He continues, quote, along with making lots of money for investors and their executives, Fannie and Freddie corrupted our political process. They blocked any attempt to rein in the risks. Their lobbyists were and are the most sophisticated and among the most ubiquitous in Washington. Well, Max Fraud-Wolf joins me here in the Firehouse studio, an economist and writer. He's an instructor at New School University, a frequent contributor to the Huffington Post, Asia Times, and the Independent. Welcome to Democracy Now!
Thanks for having me.
What do you think of the bailout?
Well, I think that it's a little bit like the Bear Stearns bailout, quote unquote, which is it's a little bit more funky and a little bit more complicated than it probably needs to be, and that it's generally represented in the media. So what the government has done is take control and assume all the risk associated with these two gigantic financial companies without fully taking them over in a classic sense and without fully offering as much protection as they're telling the world they offer. And I do think it's a watershed moment in the history of American home ownership, and it's a watershed moment in the relationship between financial firms and the government. Another, and they've been coming fast and furiously in the last 13 months as the credit crisis intensifies and drags out, but it's a big change in the way American homes will be financed down the road. And it's a big change in who's to blame and who has to ultimately pay back for the mistakes of the housing bubble.
Max, step back. How did these institutions get established and why?
Okay, well, they were established for reasons that will be immediately interesting to your audience, I'm sure. In 1938, Fannie Mae, the older, larger, was born. And it was born to do two things, which I think we can relate to now: reduce the number of foreclosures and increase the amount of homeownership by middle-class Americans. Before Fannie Mae, a relatively smaller percentage of more affluent Americans owned their homes. So in 1938, only about 40%, a little over 40% of Americans owned their own home, whereas last year, 68% of Americans owned their own home. So it did work on some level. Freddie Mac was started in 1970 to give competition to Fannie Mae, and Fannie Mae was taken out of the government and privatized in 1968. So in 1938, Fannie Mae is born. In 1968, it's privatized. In 1970, Freddie Mac is introduced to compete. Their basic function has been, with the way it's done has changed a bit, but to act as an intermediary between banks loaning to households and financial markets to make more loans available at lower prices to more Americans.
Senator Christopher Dodd of Connecticut says he did not know this was going to happen, well, at least as quickly as it did. Mm-hmm. He's in charge of banking.
Senate Banking Committee. He did authorize a lot of the moves that were made on Sunday in earlier congressional activity, so it's hard to believe that he couldn't have imagined something like this was happening. And I don't believe he wasn't privy to 5 weeks of emergency Treasury Federal Reserve meetings on this subject.
Who was privy?
Well, the Treasury was certainly there. OFEO, the Office of Federal Housing Enterprise Oversight, the group that's done such a stellar job in regulating Fannie and Freddie over years past, they were there. Some representatives of various other government agencies, the Office of Thrift Supervision, Office of the Comptroller of the Currency, and select members of the House and Senate, as well as, at least by stories, Obama's people were in the meeting and were at least allowed to sit in, possibly to contribute. I believe, and I don't know if this is correct, that McCain's people were not there, but were also invited.
So the campaigns were invited to be a part of this.
The senior
Why?
financial markets and economic people. Well, because a lot of what this, again,